Good evening, everyone, and welcome to the webinar on navigating COVID-19 for business owners in Canada, presented by IG Wealth Management in the Okanagan region. My name is Brett Millard. I'm the Regional Director for IG Wealth here in the Okanagan, and I'm going to be hosting the webinar this evening. Before we get started, I just wanted to talk really quickly about the software that we're using. Like everybody else, we're getting used to working from home right now. And all of this is a little bit new to us. We have used the Zoom software a couple times already for similar presentations, and it's gone pretty well. But of course, many of you have likely heard reports in the media about Zoom having some issues, and in particular, hackers taking control of Zoom meetings and sharing their screens with inappropriate images on them. We're using a specific paid version of Zoom, which is their webinar feature, which allows me to control the meeting and make sure that nobody else can share their screen or even unmute their microphone to speak unless I give them permission to. So that should take care of any issues with hackers, and hopefully we have no issues. Of course, if you do want to ask any questions live during the Q&A section at the end, just send me a note and I can unmute your microphone so you can do so. On that note, with questions and answers, I am going to try really hard to keep this presentation to our 1 hour that's allotted time and respect everybody's time. So I'm not going to be answering too many questions as we go through the presentation, and instead going to save them for the end. Having said that, you can submit a question at any time and use the Q&A function that you'll see on the Zoom features bar when you move your mouse around on the screen. So please feel free to submit a question anytime. I'm going to keep an eye on them on a separate screen so that if the question coming in is appropriate at the point in the presentation I'm at, I will try to answer them at the time where it makes sense. And otherwise, as I said, I'll save the rest of the questions for the end of the presentation so that anybody that wants to jump off the call right after it's done can do so. There is also a chat feature on Zoom, so you'll see both the Q&A and the chat. And I'm going to ask everybody only use the Q&A function because it's really hard for me to watch both windows at the same time, and it's a little bit easier to just use that one. And when you submit a question, you have the option to have your name shown or submit it anonymously. And of course, either one is fine, but understand that only I can see the questions being submitted, not all the attendees, so feel free to have your name in there if you want. It also makes it easier for me to follow up afterwards. So let's begin. As I mentioned, my name is Brett Millard, and I'm the Regional Director for IG Wealth Management. I'm a certified financial planner and a chartered investment manager. In addition to my day job, I've also been on the board of directors of FP Canada, which is the national financial planning professional body and certification body. For the past 6.5 years now, I spent 2 years in the vice chair role, and I took over last summer as chairman of the board. And I think it gives me a bit of a unique perspective on what's going on in our industry and in our country as a whole. And more than happy to answer questions regarding that at the end as well. With my team in the Okanagan, we have 38 financial planning professionals, and the majority of those all have their CFP designation as well, which is the gold international standard for professional financial planners. The 38 financial planning professionals we have are supported by an additional 32 support staff between our Kelowna and Penticton offices. And we also have a couple of in-house specialists. Ogle is our in-house insurance planning specialist. Kevin is our securities and wealth planning specialist. And Mark is the mortgage planning specialist. And the reason I highlight that, I think it's really important to have these additional team members on board and have them actually in our office, in addition to all the resources we have in the other IG offices across the country, most notably our advanced financial planning department, which I'll talk a little bit more about at the end of the presentation. So the agenda for today, as the title suggests, we have focused this presentation on business owners and the economic impacts as well as the government relief measures that we're going to apply to business owners in particular in Canada. We did another presentation just the other day that was more focused on individuals and personal financial planning and went into more detail on the personal financial planning side. And I'm more than happy to share that presentation with anybody that wants. Just reach out to one of us, anyone at IG, and we can send you a copy of that one as well. So the agenda is on there. We're going to start talking about financial planning itself for a little bit at the beginning. Then we're going to move into more specific government relief measures, including the tax date extensions and filing deadlines, economic support measures for both individuals and businesses. And we're going to wrap it up by talking a little bit about how we approach financial planning and how that factors in with business owners in particular. Before I do that, I'd like to do a quick poll just to gauge how everybody out there in the audience today is feeling about the economy and how it's going to affect your business. So in just a moment, I'm going to launch the poll live, and you're going to have 4 options. Option A, I'm really freaked out and I'm not sure how my business is going to survive this pandemic. Option B is I'm nervous, but doing okay so far. Option C, I'm not too worried and I'm instead focusing on my long-term plans. And I just added option D at the last minute because I think it's important to talk about as well. I'm looking at this as an opportunity to make changes and come out of this pandemic even stronger. So the poll is now live and you should be able to see it on your screens. Okay. And as you vote into the poll, I'm just going to leave it open for about 20 seconds. And be honest, it's all anonymous. Just put in whatever makes the most sense for you and what you kind of feel is the strongest statement towards how you're feeling about the economy right now and how it's affecting your business. And I'll just leave that open for about 10 more seconds, get everybody's votes in. Okay. So the results are in, and I want to talk about them for a moment here. I'm very glad to see that nobody is really freaked out and not sure how their business is going to survive. But having said that, I do understand that there is an awful lot of Canadian business owners that are at that state right now. And quite honestly, there are a lot of businesses that will not survive this. The key to surviving a pandemic like this, or an economic downturn really, because these have happened before and they will happen again, is making sure your business plan has some longevity built into it. The next one, I'm nervous, but doing okay so far. We have roughly a third of our attendees that have picked that option, and that makes total sense as well. Anybody that's not, at least a little bit nervous right now, it's almost questionable because these are completely new times for all of us. We haven't gone anything quite like this before, but we can certainly take some learnings from past historic events that are similar. We've got 22% that selected that they're not too worried and focusing on their long-term plans. And that's great to hear as well. That I hope means you have a written business plan and it's a document that you reviewed on a regular basis, and ideally also a written financial plan that incorporates both your personal and your business planning input. And last but not least, we have a good majority, a little over 40% that have said they're looking at opportunities to make changes. And I mentioned I just recently added that on at the last minute before we started tonight. And the reason being, I think it is a great opportunity for business owners when we do come out the other side of this, this event, to look at their business with a different lens and say, what can I change to make my business even stronger and more resilient for the next economic downturn? Because it is going to happen. And that could be things to make your business more efficient, lower your overhead, make your business more profitable, and certainly building in more protective measures for your business as well. So thank you very much for participating in that. And let's get on with the main part of the presentation. As I mentioned, we're going to start by talking about the 5 principles of a financial plan. And why I wanted to start here is financial planning is often misunderstood. And many people look at it, and especially people in our industry, that will say, yeah, you've got a financial plan, and they show you their quarterly investment statement. And it shows what you're invested in your rate of return, and hopefully at least the fees you're paying, but little else. And I want to make sure that we're totally clear here. That is not a financial plan. A real financial plan is a living document, and a living document is something that is regularly updated and amended, that shows where you are today and where you'd like to be in the future, which is the goals that you're setting for yourself, and then a detailed roadmap of how you're going to get there. And a financial plan for a business owner must incorporate both their business and their personal lives and really mesh the two together in the planning process, because most business owners, if not all, their business is such a big part of their overall financial picture. So it's really important that we look at that carefully when we're doing this. So the 5 principles: using time to your advantage, diversifying your portfolio, avoiding emotional decisions, maintaining that long-term focus, and staying invested. I'm going to quickly walk through each and say why it's so important to look at these from a business owner's lens. So the first one is use time to your advantage. And time reduces uncertainty. I want to explain what that means. What we have on the screen here is looking at the TSX, so the Canadian Stock Market Index, and looking at the total returns from 1947 to 2020. And these are rolling periods. So I want to describe what a rolling period is. You can see with 1 month returns, we had 877 one-month periods from 1947 to 2020. And at looking at all 877 of those periods, 61% of them were positive for the stock market and 39% were negative. As time goes along, let's take 3-year returns. There's 842 of those 3-year periods because the first 3-year period did not happen if we started in 1947 until 1950. But from 1950 onwards, we took that 3-year snapshot every month. And there's 842 months from 1950 onwards. And right up to the 10 years where we had 758 months starting in 1957 through 2020. And you can see the number of negative returns as it goes down as we go increase in time. So a 3-year return, 90% of that entire 73-year period, any 3-year term you took was positive 90% of the time. So that means you could invest all your money the day before the 2008 stock market crash or the tech bubble burst or even February of 2020 and still be positive most time. And as we go all the way up to 10 years, 100% of the time we saw positive returns, no matter which month you started at, over at 63 years. So it's really important from a planning perspective to look long-term because we're going to have markets going down, we're going to have economies going down and slowing down over the course of a business's existence. And we want to make sure the business is set up so that it can weather some of those speed bumps and still be in business to take advantage of that 100% long-term growth. The second principle is diversifying your portfolio. So this slide itself looks at investment portfolios, but I thought it was really important to tie this into what it means for a business owner. So to start, I'm going to explain a little bit about what market cap means. So you can see on the top left, it says Canadian small cap or US small cap or Canadian large cap. Cap refers to market capitalization or the total value of a company. So for example, let's say you had a company and the share price was $10 per share and there was 1 million shares outstanding. That company would have a market cap or value of $10 million, $10 times the 1 million shares. Now, market cap size is looked at differently, say in a country from Canada versus the US, right? In Canada, a small cap company is going to be a junior startup mining or oil company, a startup tech company. It's going to be fairly small in overall value. And a large cap company in Canada is going to be something like one of the big banks, right? Or just recently this week, Shopify, online shopping software provider, overtook TD Bank as the second largest company by market cap in Canada. So when we look at something like RBC, which is the largest market cap in Canada, or Shopify or TD, and we call those large caps here, in the United States, those at best would be considered a mid cap size because the large cap there is going to be companies like Amazon and Google and Facebook, companies that are just enormous in their total market value, and we just don't have anything that size in Canada. So hopefully that explains the market cap. And now I want to talk about what this diversity means. If you looked at the end of 2010 and said, geez, the Canadian small cap stocks were the best performing asset class in the world. They're better than European equity or global, they're better in bonds, emerging markets. So on January 1st, 2011, you said, I'm going to put all my money into Canadian small cap stocks because that's the #1 performer. And you look at 2011 and Canadian small cap was second from the very bottom. And again in 2012, and it wasn't much better in 13, 14, 15. So if you were invested entirely in Canadian small cap stocks based on the 2010 performance, you'd have a pretty rough next 5 years. Likewise, European equity was the worst performer in 2010. And by 2012, it was in the #1 spot. And you'll see as you look across the slide, all these different asset classes move up and down between strong and weak performance. On the flip side, if you look right around the middle in the pink, you can see moderate portfolio that goes all the way across and never gets up at the top, but never really gets to the bottom either. So that's showing what a diversified portfolio can do. And to be honest, the example here, I don't think is very well diversified. It still has 30% Canadian stocks in it, 10% European stocks, 20% US, and 40% in bonds. So it's a typical 60 equity, 40 fixed income balanced portfolio, but 30 of the 60% is in Canada. And you can see it's a much smoother line. So instead of typical market performance where it's kind of a roller coaster ride like this, we're smoothing it out for investor and just kind of having more slow, gradual growth over time, which is what most investors really want. They don't want the wild swings. And that, as I said, is something with half of its equity inside of Canada, which I think is a really horrible idea, and I'll talk about that a bit more after. Now, why do I think this is so important for business owners? Business owners in Canada, almost all of them, their business is tied directly to the Canadian economy. Their customers are either all Canadian or mostly Canadian, and that means they have no diversification in their business. It's all tied to Canada. Their either biggest or second biggest asset, depending on the size of their business and value of their house, is their home. Their home is also tied directly to the Canadian economy, Canadian real estate. So when you look at an average Canadian small business owner, and almost all the assets they own, all their net worth is already tied to Canada. And then you look at their investment portfolio, and the average investment portfolio in Canada is 93% Canadian content. And Canada, or Canadian stocks, represent 3% of the global stock world, or the equity marketplace. That to me is just crazy. And there's some reasons for that. And of course, I'm happy to answer more questions on that later. And the reasons are largely because the big banks in Canada, which still manage the majority of Canadians' money, are heavily incentivized by putting their clients in Canadian investments. It's not great for the clients, but it's good for the banks. So as a business owner, when your business and your home are already tied to the Canadian economy, you need to look very carefully at your investment portfolio and make sure that you're getting a bunch of international exposure in there. The second thing you should be doing is looking at your business and trying to figure out if there's ways to diversify the reliance on business revenue outside of Canada as well. That could be looking for international customers. It could be looking into certain industries that are more heavily swayed by international factors. Example of that might be something in the mining area where, yes, it's a Canadian mine, but the price of the materials that they mine is largely governed by China and emerging market growth, much more so than Canadian consumption. So diversity is really important, and it needs to form a major backbone of your financial plan. Next, we move on to the emotional investment decisions. And this should really say investment or business decisions, because the investment markets can go on this roller coaster ride, as can the economy. And when the economy is on that same ride, that really affects business revenue as well. So when the economy is going up, people are encouraged, they feel confident, they're excited. They reach a point where, if nothing else, they almost get overly confident, and the most common term is greed. And that's right at the top where that jubilation takes place. And how I like to describe that is, when you start getting stock tips from your barber or your taxi driver, that's a pretty good sign to be worried. Now, when the market takes a turn for the worse, people begin with, maybe a little bit nervous, they get agitated. And as the economy or the market start to go down more and more, they get distressed, disparity sets in, nausea, and eventually the feeling of dejection or even hopelessness. That to me is a great sign that things are ready to start turning around. So the famous investor Warren Buffett once said, be fearful when others are greedy, and be greedy when others are fearful. And this chart explains exactly that. When everybody else is getting really greedy and they're really optimistic, and the stock market and the economy can do no wrong, that's a time to start being fearful. Now look at this again and think, where are we right now? Are we somewhere between the nauseous and dejected? Are we already past the dejected stage and already moving back up? I can guarantee you that the average consumer or business owner is not really at the encouraged stage yet. Maybe they should be. Now, I'm not saying that we're already through this by any means. I have no idea how long the downturn will last. And I don't know if these last couple of weeks in April are already the start of the recovery, or if this is going to do another pullback before we go up. But I do know it's going to go up. So I think it's really important to look at this chart and realize what stage it's at, and realize that these emotions are normal. But what you don't want to do is let your business decisions or your investment decisions be steered by that emotion. And again, having a good plan can help you avoid doing that. So as I said, this is not the first time we've gone through this, and it's certainly not going to be the last either. And I want to show you what I mean by that with the fourth principle, maintaining a long-term focus. This is looking, again, we're using the Canadian stock market, the TSX index as an example, and we're looking at bull and bear markets since 1955. Now you can see all the blue at the top is when the economy and the markets were in growth periods, and the little grays at the bottom are the number of months in the drops in the bear markets. So let's look at the most recent one. So on the bottom right, 2008, we had a 9-month bear market. Canadian market was down 43%. The US market was down closer to 50%. Since then, the Canadian market's gone up about 190%. The US market's gone up about 350%. So when you look at how big and how many months those average bull markets last, anywhere from 40 to 140 days, and you look at the bear markets that are anywhere from 7 to 25 months, and most of them are 7 to 13 months. That should tell you an awful lot, and that's why we need to have a long-term focus with our business planning. We don't want people making decisions now that are going to affect their business or their investments for that next, however long it is, 80, 100, 120 month growth period that we're going to have, because we will have it again. Now, it's interesting. You look at, as I said, the 2008 drop, which was 9 months, 43%. And the one just left of that, the previous one was the 2000-2001 tech bubble. And that lasted 25 months. That was definitely a long time. And when you think back to that previous chart, and we talked about that feeling of dejection and hopelessness, 25 months is a long time to go through that. So we don't know how long this one will last. I certainly do not expect it to be anywhere near 25 months. With one big caveat, I want to say that as of right now, we do expect the downturn in Canada to be longer than the US and other areas. And there's a couple of key reasons for that. For one, we look at the stimulus measures, and we're going to get into those in just a minute. The stimulus that's been put together by the US government, and a lot of this is not reported in the media because the media is very against the current administration there and owned by the opposition. But they've put together a stimulus package that's roughly 300% larger than Canada's when it's compared directly to GDP. So I'm not saying the US is bigger than Canada as a country. I'm saying their stimulus package is like 10% of their GDP, and our stimulus package is around 3% of our GDP. So their government is being much more aggressive to make sure that their economy turns around sooner rather than later. The other big issue is that they did not come into that with such a challenging economic environment to begin with. Our government has been spending a lot of money the past few years as if we were already in a bear market, but not really going towards economic stimulus that would have been propping the market up. It's going towards other things. So what that means is our war chest is already depleted, and the consumer debt situation is quite out of control already in Canada, being the highest consumer debt country in the world. And our consumer debt to GDP is roughly 50% larger than the US. So we are, concerned, I would say, that the Canadian recovery will take longer. And that's, again, why it's so important to look at that diversity and make sure that your investment accounts are diversified outside of Canada. But keep this one in mind. Every time we do get into one of those little gray bear markets, you can just see what happens on the other side. And you have to always make sure you have that long-term focus and picture. Now, the fifth principle I want to talk about is staying invested. And this one I think is very important to understand for business owners. Now, the chart that we've put together has got the Canadian and the US indexes from 1990 to 2000, sorry, mine's covered there, 2019. So the light blue is the US and the dark blue is the Canadian market. And if you look at the bar chart on the left, you're going to see all trading days over that 30-year period. So if you were invested in the US market for 30 years and did not touch your investments, just own the index, you would have averaged a 7.7% average annual rate of return. In the Canadian market, you would have averaged 5%. Now, over 30 years, that is, I think it's almost 1,100 months. 1,100 days. If you were to miss out on only 10 days, your 7.7% return would drop to 5.3% over that entire 30-year period. That's by missing 10 days out of 1,100. And if you're in the Canadian market, your 5% drops to 2.9. Now let's move that up a bit. Let's say you pull out 40 days or 50. That means for 30 years of having your money in the market, you're basically flat, if not losing money over that entire 30-year period of being an investor and taking risks. And that's such a small amount of time. And why I think this is so important for business owners is that many business owners right now are looking at their investment accounts and saying, geez, I really need to find money from somewhere to pay the bills, to keep my staff employed, do everything else. And I want to show you the risk of doing that, of pulling that money out for a month or two or longer. If you miss out on some of those best trading days, it can wipe out your entire growth for decades. So I'm not saying that you absolutely can't do that. There are certain situations where you have no other choice and you're going to have to dip into your investments. But I really want people to think of the mantra that is told in every business class, every MBA program, and it says, as a business owner, make sure you pay yourself first. What I don't want to see people doing is spending 20, 30 years of their business career, putting everything back in the business, saying, you know, I'll pull money out later, it'll be worth money later. You need to make sure you're paying yourself first, and you need to make sure you're taking that money and putting it towards your retirement plan and diversifying it outside of your business into other asset classes. And in a time like this, if you decide to dip into those savings and put it back into the business, and then you miss out on the best 10 or 20 days, it could wipe out decades of your growth. Historically, when we have a major, steep decline in the markets and the economy, the reversal and the climb back up happens just as quick, if not quicker. So we really don't want to be out of the market missing those days. And that's why I wanted to put this in here to show you how important that is. Now, I'm sure there's somebody out there listening saying, oh, if I had a time that's just perfectly and pulled my money out at the end of February and I put it in on May 16th, the day the market really takes a turn and goes back up, I'd be that much better off. But let me ask you this. Are you really sure you know exactly what day to pull the money out and what day to put it back in? Because the best investment minds in the world don't know. And the most experienced economists that have been working at nothing but this for the past 40 years, they don't know. So what says you're smarter than all those people and you have some kind of crystal ball and you can know exactly how to time the market? Timing the market absolutely doesn't work. And it goes back to the whole idea of just staying invested, sticking with your plan, and not trying to move in and out anytime you can. So please keep that one in mind. Now, we're going to switch gears a little bit and start talking about the government relief programs, because I know there's a lot of questions around there and I want to see if we can answer as many as possible. To start, we're going to talk about the tax date, the filing and payment extensions that have been introduced, and understanding that some of these are still a little bit fluid. Starting with individuals, so this is personal tax returns, the normal filing deadline is the end of April, and they've extended that to June 1st. And I really don't like the way that was extended, only because April to June sounds like 2 months, but really it's a month and a day, from the last day in April to the first day in June. So it would have been much smarter and less confusing for Canadians to extend to the last day of May if that's what they wanted. But nonetheless, this is where it is. So the filing date's been extended to June 1st, and payment date, so payment for taxes owing, is extended to September 1st. Now, I want to be clear here as well that many, many Canadians are owed tax refunds. They put more money in than they need to. So there's no real reason to wait until June 1st to file your taxes. If you're getting a refund, you're going to get that money back sooner by filing now. And you can use that to help with liquidity issues, as everybody has at the moment. And if you owe money, you still don't have to pay it till that September 1st deadline. So there's really no reason to wait. And my recommendation would be to get working on that. And certainly people working from home, it's probably a good time to do it. Self-employed, non-incorporated business owners have always had a little bit of extension. It's June 15th is their filing deadline. So that has not changed. It's staying the same for right now. But of course, the payment deadline is also being extended September 1st. Corporations have different year ends and different tax filing deadlines. So what they've done for right now is they've taken deadlines that were after March 18th through to the end of May and deferred all those to June 1st, with payment dates being extended as well. And as of right now, that's it. I would not be surprised if we see a bit further extension, but these things are changing pretty rapidly. So that's why we're just giving you the latest information we have. Trusts with December 31st year ends. And they had their extension put out to May 1st, 2020 as well, and the same payment date, September 1st. And trust with filing dates in April or May have been deferred to June 1st. So trusts are a bit of a unique situation. Make sure you look at those rules closely if you have to do tax filings for a trust and figure out what your deadline is and make sure you're not offside. One important thing that can really help with the liquidity issues for businesses right now, while many don't have revenue coming in, is the deferral of sales tax that's collected. So GST, HST, import duties, taxes, they've all been deferred until June 30th. So normally when you're remitting those monthly or quarterly, there's a bit of a deferral right now out to June 30th. And CRA has also suspended all audit activity for the time being. And there's no word yet on when that might be reintroduced or brought back online. So as I mentioned, keep an eye on these. They could very easily change, but this is what we have for right now. Before I go into the business specific support measures, I'm going to quickly go over the individual ones because these are still going to apply to a lot of business owners and probably a lot of your employees as well who may have some questions and look to you for guidance in financial matters. The EI, Employment Insurance Program, is largely the same. They have waived the 1 week waiting period, and they've tried to speed up the application process to get money in people's hands quicker. The reason we still put it on there, even though not much has changed, is that is still the preferred choice over the Canada Emergency Response Benefit, which I'll explain in a second. The reason it's preferred is that it has a much longer maximum term, 45 weeks, and the benefit amount up to $573 is higher for many people. But again, it'd really be important to check out on both of those. Qualification, of course, is harder. Job loss has more defined criteria. You need a record of employment, and you have to work a certain number of hours, depending on your position. The Canada Emergency Response Benefit is a flat $2,000 per month and a benefit period of up to 4 months. So this has been the government's main initiative to get some money in people's hands to work them through this. The CERB is open for people that are not eligible for EI. Originally, when it was launched, you're not allowed to have any income coming in at all. But just recently, they amended that to say you could have up to $1,000 a month of income and still qualify. Because there was lots of people that were out of work but still had a little bit of income trickling in for one reason or another. And they want to make sure that it was open to more. This is still not capturing an awful lot of people, but it's definitely a little bit better than when it first came out. Applications are now open. And I wanted to explain that a little bit too, because the application for this, as well as a bunch of other programs, is through the MyCRA site. And because of the overload of people going onto that site, they have restricted access based on the month of your birth. So if you're born in January, February, or March, your data access is Monday. April, May, or June is Tuesday. July, August, September, Wednesday, etc. And then Friday, Saturday, and Sunday is open for anybody to go on there and access. And most of these programs that we're talking about, if you do have to get information or you want to apply, you're going to be going on to that MyCRA site. Or we'll talk in a minute about the business version of it, the My Business account. The Canada Child Benefit. So for those that already qualify, your payment scheduled in May will have an extra $300 per child over the regular amount. There's no need to reapply if you're already receiving it. If you're not receiving it, but your 2019 income is lower than it has been in the past, that would be another reason to get your tax filing in right away so that you can qualify for that. Similarly, the GST credit, there's no need to apply. It's for low and modest income families based on the 2018 tax filing. And it's $400 for individuals, $600 for couples. And that's supposed to be starting in early May, but again, we have not heard too many details on that, so we're waiting to hear more. Student loans, there's been a 6-month moratorium for all interest on Canada student loans. And again, there's no need to apply on that one. It's just automatic, built right into the program, nothing you need to do. And we'll see what happens when we get closer to the end of that 6-month period. There may be some more updates or changes there. I've already talked about the tax filing and payment deadlines. And lastly, I just put a note in here because a lot of people on this call are from British Columbia. Now, we do have people on the call from other provinces. We have clients from across the country, but I just wanted to put this on as an example. So in BC, there's also the BC Emergency Benefit, which is a one-time payment of $1,000. There's the Climate Action Tax Credit. These are both for low and modest income families. And payments are scheduled for May for the emergency benefit and July for the climate action payment. But again, we're waiting on a lot of details right now. We don't totally know. The reason I put them on there is just to remind you that there are provincial programs as well. And that's not an exhaustive list in BC. For example, BC also has the $500 rent subsidy for renters. And each province has their own. I would suggest that you reach out directly to your IG consultant, or you can reach out to me as well if you don't have one and you're not sure who to ask. And we've got a list of programs from every province, and I believe we're getting a new updated list this Friday with all those programs and the updated details on them. And we're happy to share that anytime. Now, moving on to the measures for businesses and employees. This is, again, everything is changing rapidly, right? It's been a bit frustrating the way things have been released, because when we talk about this first one, the Canada Emergency Wage Subsidy, this came out with a lot of fanfare. But then, of course, we realized that it actually had not gone through Parliament and been passed into law, and there was no way to do it at that stage. And there was no details on how to apply or when to apply. And this has kind of been the situation with the government all the way through this, is that the Prime Minister gets on TV in the morning and kind of shoots from the hip and says a bunch of things. And then people have to go back and figure out how to actually do this after. And most of the programs change when they realize that what he said isn't necessarily a viable or an easy option to put into reality. But having said that, I want to give you where we're standing today and what the programs look like, and just understand that they may change again. Now, the Canada Emergency Wage Subsidy came out of another program that was originally announced that was going to be a 10% wage subsidy for employers. And it was quickly realized that 10% was not going to be enough for employers to keep their employees on the payroll and not have to let them go. So the overhaul came back, and we got the Canada Emergency Wage Subsidy, which is covering 75% of wages to a weekly maximum of $847 per employee. And it is for a 12-week period. So you can see on the screen, we talk about what's eligible, including salary. It could also be things like the employer portion of CBP, EI, but of course, stock options, personal use of vehicles, or some other things that aren't. So it's important to go on to the canada.ca website and really understand the whole program and all the features there. We just learned that applications are supposed to be opening next Monday, April 27th. And I'm sure we're going to hear some more information between now and then so they can figure out exactly how to roll this out. But when the applications open, hopefully they do, in fact, open on Monday, it's going to be retroactive to March 15th. And there's going to be 3 distinct eligibility periods. So what is the eligibility? And this is important because it's changed a couple times as well. For the first of the 3 periods, so that's March, you have to have a drop in business revenue of 15% or more. And for the second and third periods in April and May, 30% or more. Now, originally, you had to measure it. You take a look at your March business income in 2019, your March business income in 2020, and see if it had the appropriate drop. It was amended to use that method, or you can also take your average revenues from January and February of this year. So what that means is if you have $50,000 of business revenue in January of this year, $100,000 in February of this year, you take those 2 numbers, add them together, divide by 2, you have an average business revenue of $75,000 per month. Now, to qualify in, say, May, you would have to have business revenue that is 30% less than $75,000. Okay, and that's the qualification period. It's not based on the number of people employed. And you do have to kind of take a look, though, and have eligible employees to make sure it works, right? This program is going to be certainly far more reaching, and I think a lot of people will qualify for it. But for those that don't, that original 10% program, which was dubbed the Temporary Small Business Wage Subsidy, is still in effect as well. So this is eligible for, again, small employers, and it's a subsidy period of up to 3 months. and it's 10%, but it's a much smaller maximum, $13.75 per employee for that whole 3-month period, and $25,000 per employer. So it's again going to be retroactive starting March 18th, going through to June 20. But any money that you qualify for here would reduce the benefits under the Canadian Emergency Wage Subsidy we just talked about. And these things have changed numerous times, as I keep mentioning, so make sure you get all the details when applying. Now, this will not affect nearly as many of you, but I wanted to put something in quickly about the extension of the work sharing program. So employers impacted by a downturn in business can benefit from changes to, this is an existing EI work sharing program, and helps you keep people on. So instead of having to let one employee go, you might cut the hours down on both employees and keep them both on a part-time work sharing plan. This was previously had a 38-week maximum term for the program, and that's been extended up to 76 weeks. So the big changes are the extension up to 76 weeks. They've made the eligibility requirements a little bit easier, and they've streamlined the application process. So for anyone looking at this, make sure to go online again to canada.ca, look at the business relief measures, and see if it applies and what the details are. Now, this technically should be under the individual relief programs, but I put it under the business section because it's going to apply to a bunch of business owners. The Canada Summer Jobs Program is something that has been around for a while, but historically it would provide wage subsidy when they look at the minimum hourly wage for each employee of up to 50%. And that has been boosted up to 100% of that minimum hourly wage. The program has been extended, so you could have people employed right up till the end of February next year. And normally the application period for this summer would have ended February, but they've extended that as well. What they've extended to, though, I don't actually know. I've been looking into that recently, and I'm just kind of waiting to get some more details. And part of the reason I think we're waiting on details is the Prime Minister just this morning announced some additional measures for post-secondary students, and there was some essentially grant programs that were announced today as well. And we're waiting to get kind of the full analysis and go through those in detail. So anybody that's either looking at hiring post-secondary students for summer jobs or is in that situation themselves, stay tuned. There's going to be some more details out right away, I think. And I wanted to talk about laying off employees as well. This is not an easy time for anybody. I know it's hard to talk about, but layoffs are certainly a part of what we're going through right now. And lots of people are unfortunately having to lay staff off. But I really want people to do their homework and talk to professionals before they actually lay anybody off. Because if you do so incorrectly, it can cause huge problems for you. Legal challenges, financial problems, everything else. British Columbia in particular has very unique employment laws. And the very first thing you need to do is look at the employee contract that you have with that employee and see if it has specific wording on layoffs. Some contracts have it built in, some don't. And if you don't, you need to kind of go through the whole process and even run the math and figure out what it will cost you to lay somebody off. Because in some situations, I just sat down with a business owner the other day and looked at this. We figured out what it would cost them to lay somebody off, and then we calculated when they think they might be able to hire somebody back for that position. And it was cheaper to keep paying that person their salary, even though they weren't at work, than what it would cost them to lay off because of the length of time they've been there. So please take a look at that closely and ideally talk to an HR lawyer before you make any changes there. Now, the last big business measure I want to talk about is increasing credit. Okay? There's a number of different programs. There's the specific program for credit for farmers through the Farm Credit Canada, the Business Credit Availability Program. But the one I wanted to focus on today is a Canada Emergency Business Account. This has had a lot of fanfare, and I think it really does go a good distance of helping businesses with short-term liquidity needs to pay their rent, pay staff wages, pay bills, whatever professional costs they have, and make sure they can keep the lights on and keep paying their bills over the next couple of months until revenue starts coming in again. And it's a $40,000 loan. The loan is being provided directly from the bank or credit union that you do your business banking with, where you have your business bank account. It's not the government of Canada that's giving out the loan, it's the financial institution, but the government of Canada is securing or backing the loan. Okay. Now, a couple key things with this. It's interest-free for the first year. And there's loan forgiveness. So if you borrow $40,000, up to 10,000 or 25% of it is forgiven as long as the loan is repaid before December 31st, 2022. So I think it's really important to look at that as well. It's a great program. It's got great terms to it. To qualify, the original qualification criteria was a business had to have 2019 payroll, so your T4 summary, between 50,000 and 1 million. And that was recently expanded so to include more businesses. So they changed it to T4 summary of 20,000 to 1.5 million in 2019. So the very first step is to look at that T4 summary, figure out what the number is if you qualify there. And then from there, you would go directly to your financial institution. So what does that mean? You need to have a business bank account. If you run a small business and you run everything out of your personal bank account, it will not work. You have to have a business bank account. It has to have been set up before March 1st. Now, if you do have one of those, all of these institutions have already been required to send out, there was the original letter and I think at least one update. So they should have sent you an email already and explained how to apply. You go onto their website, they all have very simplified forms. You put in your basic information, that number off the T4 summary, your 15-digit business number, and you put all the other information in. This is missing an awful lot of business owners, unfortunately. One of the biggest gaps is business owners that pay themselves entirely in dividends. So let's say you have a small personal corporation and you and your spouse are the only two shareholders and you pay yourself entirely out of dividends, or maybe even a small salary to one of you to claim childcare expenses or something, but under that $20,000 limit. It's kind of an all or nothing thing, which is very unfortunate. And I know that the opposition political parties are pushing the Liberals quite hard right now to get that changed. So we'll see what happens. But for now, the program is already open. You can go online with your local bank or credit union, whoever you use for your business account, and put your application in. And the money's supposed to land in your account within about 4 business days. So that will help a lot of people with their liquidity right now. So this is just a summary of the programs we were talking about, where to get information. And the short version is you can go on to canada.ca and look at the economic response plan for business and get information on everything and apply for most of the programs there. The only one that you're not is you're applying directly at your bank for the 40,000 loan. Now, I'm going to talk for a few minutes of how our kind of take on financial planning with the IG Living Plan works and how we wrap all this up and provide the service that the clients need. A financial plan, historically, there's always been 5 pillars of financial planning. And we've taken that and said there really shouldn't be 5, there should be 6. Because your business, and you can see on the bottom left where we have maximizing your business success. For a business owner, their business is such a vital part of their financial plan. There's no point in doing a financial plan if we're not including the business in it. So we expanded the 5 pillars of financial planning to 6. And as I mentioned, we have the maximizing your business success. Moving towards the right, planning for major expenses. So that could be a home purchase, a vacation property on the road, or whatever that happens to be. Preparing for the unexpected, extremely important. That is looking at what happens if you or one of your business partners or a key employee has an accident and passes away, or what if you contract COVID-19 and you're in an ICU for a month on a ventilator and can't work. We take a look at the unexpected and how we plan for that for both your business and your own family. Managing cash flow, as we've talked about, is extremely important. And part of that long-term planning process is making sure you are ready for the economic downturns, both now and in the future, and have the sufficient cash flow to see yourself through it. Sharing your wealth. This could be estate planning where you're passing your money on to your kids when you pass on, or it could also be charitable giving and charitable bequests that you want to do down the road. And finally, optimizing your retirement. And back to that principle I talked about, paying yourself first and how important that is. So we really try to take a look, not at a simple investment statement which shows your rate of return, but a true holistic financial plan. And all of these pieces together get you set up to weather storms like this and hit your goals in the future, whether it's retirement or buying that vacation home or growing your business or all of the above. Now, how do we do that? We start by exploring your current situation. And that, back to my description of financial plans at the start, is talking about taking a snapshot of where you are today, getting a detailed look at all of your personal and your business finances, your debts, your assets, and your risk tolerance, your emotional kind of wherewithal to handle market volatility, personal situation, family situation, everything goes into that, putting it all together to get a complete snapshot. Then we clarify your goals and objectives. These can be your business goals, your retirement goals, putting your kids through school, whatever they happen to be. Everybody has unique goals and objectives, and that's a key cornerstone of the financial plan. With that information in hand, we can develop a plan and customize the investment program. And the investment program, I think, is so important to talk about. I'll talk about that a bit more in a few minutes, to make sure we have that proper diversification and the money's in the right places. And with all that, we implement the strategy. And implementing the strategy is important, but equally important is proactively monitoring and adjusting. Because when we create a financial plan, we know that it's accurate the day it's created and probably for a couple of weeks after. And there's got to be at least something in there that's no longer accurate, because your personal situation changes, your family, your business, the stock market, the economy, your health, all these changes are going to affect your financial plan. And that's why we call it the living plan. It needs to be a living document that is constantly amended and updated as your situation changes. And it kind of grows and moves along with you in various stages of life. Now, looking at that, how do we pull this together? So we've got you in the center, right? Your goals and concerns, your current situation, your family considerations, and your long-term plans. Above that, we have your IG Wealth Financial Planner, who's kind of the quarterback of this and taking a look at all of your needs and all of your situation, and then bringing in the whole team to bring that plan together. So on the right, we have our in-house specialists. I talked about our securities, mortgage, and insurance specialists already, but we also have our advanced financial planning department. So this is led by a team of very senior tax, estate, and financial planning professionals that help work on aspects of the plan that are more complex. This could be cross-border tax planning for those that have a US business, US home, or even dual citizenship. This could be business succession planning, more complex charitable giving, estate planning when you have blended families. All these different pieces come into our advanced financial planning department, and team members from that department may be involved in various stages of building your financial plan. We also bring in the IG investment team. And when I say the IG team, we have a team of CFA strategists that go out and look at all the global asset managers and figure out which ones we want to use in our portfolios instead of trying to manage money in-house. Long gone are the days of the old Canadian banking system where you have a stockbroker there. You go over there with your portfolio and they build you a basket of 20, 25 Canadian stocks. You end up holding 4 or 5 of the big 5 bank stocks. You have some railways in there, some oil companies, and that's about it. And you need so much more than that. You need proper diversification, and you can get that for far less than what they charge you to buy and sell these individual stocks these days with technology and scale. Right now in our portfolios, we currently use 5 of the 7 largest asset managers in the world. And I want to explain why that scale is so important too. Let's say again, that olden day, you go to a stockbroker at Royal Bank and they tell you, look, we're going to get outside of Canada. We're going to go buy Starbucks, shares of Starbucks. And you say, well, why? And their answer is typically, they looked at the company report that was released a couple months ago, and it sounds like the company's done well the past few months and they're on track, so they're probably going to keep growing. Sounds like a good buy. That is absolutely unacceptable. On the flip side, let's look at BlackRock, the largest manager in the world and a cornerstone of our portfolios. When BlackRock wants to buy Starbucks, which they've done, they have their own satellites in the sky, and those satellites track how many people go in and out of every Starbucks location in the world every day. So they can compare the traffic going in and out to last month, last quarter, last year. And they can tell if the volume going in and out of all the Starbucks locations is up or down. BlackRock knows what the earnings are going to be for Starbucks before Starbucks knows. And that's just the world we're living in these days with technology and with scale. And because they're so large, they can do it at a very small cost to the investor. So we have an amazing team of world-class sub-advisors. As I said, 5 of the 7 largest asset managers in the world, names like JP Morgan, Fidelity, PIMCO, BlackRock. And we use those where appropriate for our clients' portfolios. We also have banking solutions. So that's mortgages, loans. A lot of our lending is done through National Bank and a partnership agreement. And where appropriate, we'll pull in those banking solutions as well as insurance for protecting those unexpected events that could happen to you or a family member or a business partner. And then finally, many of our business owner clients also have their own lawyers and accountants, and we bring them into the mix and their experience with you and your business. And we team them up with our in-house lawyers and accountants. And all these things together come into building your plan, with you at the center of it all. So the last thing I want to talk about really quickly with our plans is why a plan needs to be constructed properly and what it means to go that level beyond just a simple investment statement. A normal financial plan in our industry will take a look at how much money you have, and it'll say, okay, you've got $1 million, you're going to draw down X amount per month, and based on a 5% rate of return every year in the market, you're going to go down and you're going to run out of money at age 90. That sounds fine, but we all know that the market is not going to go down, or the market value is not going to go down like this, but you're not going to earn a steady 5% a year every single year. Some years are going to be better, some years are going to be worse. So what we do is use the Monte Carlo goal coverage, and this will take an analysis of 150 trials over a financial plan's strategies that they built in. And it'll take a look at all different market environments and all different historical returns of ups and downs in the market. And in this case, this is just showing an example. 150 trials are run. In 143 of those situations, 90% or more of the goal was covered. So for this client, they had a goal of retiring at 65. They wanted X amount a month, and they wanted the money to last till age 98. 90% of the time, 95% of the times, it would make it. Right? So let me show you what that looks like. Here's those 150 simulations. And in this case, it's a $500,000 portfolio, 5% withdrawal rate, and a 6.1% hypothetical rate of return. Now, all of these 150 different lines all average out 6.1% over their lifespan. The problem is, at what sequence do they do it? Do they earn 15 or 20% the first year, or does the market drop 20% the first year? And you can see, with all those same variables, that $500,000 for a 65-year-old could run out at age 78 and they have nothing left, or the same person might have $7 million in their account when they reach 100. So we take this very seriously, and this is the depth that we go into in the financial plans to make sure that the information we're giving you is accurate at the time. But then, because it's a living plan, as we move along every year from that age 65 onwards, we're rerunning this and we're taking a look at the updates, and that window is going to start shrinking more and more as we kind of hone in and we go later stage of retirement. So we can continue to provide updated analysis and make sure people don't run out of money too early, but also have the funds available to enjoy their retirement and travel and do what they want. So in summary, a couple key things. Having a living financial plan is so incredibly important, and having a properly constructed one that takes all 6 of those pillars into account and takes into account variable market conditions, the Monte Carlo scenarios, is really important. Diversification, I cannot talk about this enough. If you look at your portfolio today and there's too much Canadian content in there, and your business and your home is already in Canada, please, we got to talk about that, and let's try to reduce the Canadian exposure. We've talked a lot about the long-term goals and time reducing volatility. So staying invested, making sure you pay yourself first and leave that retirement fund separate from your business, and focusing on those long-term goals and not letting the emotions sway you in the short term, very important. And liquidity and cash flow and planning for these downturns is important too. So reviewing both your business and your personal cash flow needs, extremely important, and we'd love to discuss that further with you if you want to reach out. Now, I'll encourage you, if you have any questions, now is the time. You can submit them in the Q&A function that I mentioned at the start of the call. And as I mentioned, you can put those in anonymously, or if you want your names in there, I'm the only one that's going to see the questions. You can also reach out directly to the consultant that invited you or shared the video with you today. Please feel free to reach out to them. They can get questions back or answers back to you. They can reach out to our advanced financial planning department if need be for answers. If you're not sure who to reach out to, or you have some other questions, my email address is up on the screen as well, and I'm more than happy to answer any questions, so feel free to send them to me when you can. Okay, the first question coming in is, how do I access the CRA site? So there's 2 parts to that, and it can be a little bit confusing, I'll tell you why. First of all, the personal My CRA page. When you go on there, it sounds very simple. It shows your sign-up partners, and it's all the major banks, credit unions, which is great. You click on whatever bank you use, and the same login you go on for your online banking, so you put your account number and password in, that will be your main verification. So you put that in, it redirects you back to the CRA site, it's completely secured. Then they'll ask for a second piece, and the second piece of verification is they want line 140 of your 2018 tax return. So that's the return you filed a year ago last spring. You get the line 140 number off that, and they'll make sure that it's you and not somebody else going into your account, and you're in. Why I say it's confusing is that once you get in, they ask for the second level of verification where you have to request a letter to be mailed to you. And it takes a week or two to get this letter, and they mail you a passcode. But you do not need the passcode to go get all your basic information, your RSP room, or to apply for benefit programs or get whatever else you need. So don't let that discourage you. It's still good to get the letter, and you can have that on file if you need anything else. But all you need is your online banking login and your line 140 from your 2018 return. For business, you can use the same online banking login structure. And when I logged into mine the other day on my business account, it asked me for my business and personal are at the same bank. I have one login, so I used the same one. And then I just had to put my SIN number in as the primary for that business account. And it gets you in there right away. So it's not as daunting of a task as you think. Feel free to go on there. And again, if you're having problems, please reach out to us. The next question we've got is, when do the summer student grants get paid to the business owner? Unfortunately, I don't actually have an answer for that one yet. As I mentioned, the programs are changing rapidly right now for summer students and post-secondary students. A bunch of measures were just announced this morning. So I would imagine that we will see that right away. Again, going on to the canada.ca website, looking at the economic relief for business measures, the information should be on there in the next couple of days. But what I will say for the viewer that sent that in, my email address is on the screen. Please feel free to send me an email, and I can get an answer back on that one probably within the next day or two for you. Next question. This one's interesting. So somebody just asked how they reach out or how they get a financial plan done now that we're all social distancing and we're not in the office. Very much like you've seen tonight with the Zoom technology, we can have virtual meetings, and at the end of the day, it takes a bit of getting used to, but this is the exact same as us sitting across the desk or across the table from somebody and going through this process. Most of us are working off multiple screens, so we can very easily set it up where we have our video chat on one screen, we have the financial planning software open on the other, and we can even share that screen with you. So you can see what we're inputting and follow along, and we can build a whole financial plan virtually. And it takes a little bit of getting used to, but you know, it's been a couple of weeks for me of doing various things on video chat, and I'm already, I'd say, quite used to it. So don't let that dissuade you. We can use Zoom, we can use Microsoft Teams, and we can set up and do basically anything that we could do before the lockdown, we can do it now too. See if there's any other questions. The last question I'm going to share, this came up earlier today. Somebody asked if they should be putting everything into equities right now. And they said, oh, I talked to my neighbor and they said, you know, we're at the bottom, so we're throwing 100% into stocks. That is probably not a good idea for most people. Now, if you as a business owner have, say, $100,000, $200,000 sitting in your business account that you don't need, and it's been kind of collecting dust for a while, definitely reach out and talk to us. It might be a great time to add to your investment accounts, and you can put that into a retained earning business account, but have it invested. But what we're going to recommend for most people is to kind of dollar cost average into the market a little bit instead of just doing it all at once. And for your retirement savings, you know, if you're sitting at a 60% equity, 40% fixed income right now, we're not going to suggest you go 100% equity because that's getting outside of the risk tolerance for most people. But we might say, if you're really comfortable with that additional volatility, let's step up the equity. Let's do a bit of a shift and take advantage of the sale that the market's on. Very similar, some people will ask, should I just go to cash right now? And I talked about that earlier, but I want to stress that again. The only way you're actually realizing the losses that you can see on paper in that Q1 statement is if you decide to go to cash. I've shown you multiple slides that talk about the long-term regular growth of the markets, how much more growth we have versus the bear markets, and you really don't want to be going all cash. But if you're finding that you're extremely uncomfortable with the market downturn and you can't handle and it's keeping you up at night, I'm not going to say we're going to go to cash tomorrow, but that is a good sign that the risk in your account is probably at a higher risk level than it should be. So again, this is something that's built into your financial plan. We don't make a change overnight and get you back online, but what we might suggest is as the market recovers, we slowly decrease your equity weighting and get you over a period of time into a more suitable risk tolerance. So again, please reach out to your consultant, talk to them. You can always reach out to me as well. And I don't see any other questions popping up. So I'm going to thank everybody very much for attending. I hope that was useful. My email address is still up on the screen if there's any more questions. And as I've mentioned numerous times, a lot of these programs and things are changing rapidly. So please keep reading the updates that we email out and stay in touch and watch the government sites as well. And at any time, reach out and let us know if you have further questions. Thank you very much.